All right, let's bring in Paul Schatz to talk about this. He is the president of Heritage Capital. And Paul, when I throw that question to Julie about some of our guests in the past saying that we've hit a trough, that the markets essentially have bottomed, do you agree with these people, or do you think that they're, smoking something?
Good morning. Well, I think you certainly have to differentiate the markets from the economy. Economic news is always a lagging indicator when you look at it versus the market. You look at '09, market bottomed in March. The news didn't bottom till June. In this case, I think it's kind of lumpy. I would be absolutely floored if we see those Thursday first-time jobless claims exceed the low that we saw. That was 16 million plus people we saw 6-7 weeks ago. But now a lot of the numbers that are coming out now are because of the slowdown. It's kind of dragging on as the market looks forward 3 to 6 months and is saying, okay, we see economic activity coming back. I think I've never thought the V recovery was even remotely possible. But here's the problem for the market. What's going to happen when the PPP money runs out in the summer and companies have to say, geez, I've got to lay people off now? That's going to probably lead to a second, but less dramatic leg lower in the economy. So in essence, you're seeing the market here, the economic numbers here. There's always going to be that lead lag.
Paul, Dan Roberts here. Thanks for being back with us.
Dan,
something I wonder about, this is a note from JP Morgan this morning on the retail numbers. It says what's more important and more in doubt is the vigor of any summertime recovery, which of course is the take many are following. Pick your industry, pick your set of data. And it's interesting because people can then either be bearish or bullish. You hear people say, oh, summertime, we'll see a big bounce back. It's what President Trump has been saying all along, pent up demand. It's hard for me to really believe that that's what we're going to see as we drag on here, because we're pretty close to summer. We're in late May. The weather here is beautiful. We're starting to feel like, is everything really going to be open and running? And of course, sports leagues are looking at the same possibility. They're trying to start up in summer. I don't know, man. And this JPM note sees annualized real consumer spending growth in Q2 tracking the ballpark of down 50%. It's just hard to imagine, even as stores reopen, that suddenly everyone is going to rush out and spend money and vote with their wallets, so to speak. What do you see happening in the late summer and fall? And of course, eventually, if schools are going to open, we have the back to school shopping season. Maybe that's a silver lining.
So that was so much in one very long question, Dan. So I'll do my best to bullet point it. So number one, the economic collapse we're seeing now is nothing like we've ever seen because it was government induced. Number one. We've also never, ever seen a response from the Treasury and from the Fed like we have. So you've got there's no playbook to go from. In my very humble opinion, I think as they reopen economies, from what I see online and what I kind of feel, 25 to 33% of the country is going to go right back to where they were, full steam ahead. So some of the economy is going to come back, but I think the majority of people are taking a cautious to very cautious approach. They're going to continue to spend online. Yes, there's pent-up demand for things like cars, and I saw that Norwegian and Carnival are seeing a surge in bookings for 2021. But when you surge from zero, it's the absolute number is wonderful, but on a relative basis, it's nothing. I think whatever happens, it's going to be lumpy, very, very uneven until we get probably a year's hence. So it's hard to fathom, but we're going to see. That's why I think instead of a V, you came down and collapsed. We're going to recover a third to half of what we lost, and then we're going to have a lot of sawtoothing around. We'll be at the mercy of whatever indicator and economic report of the day shows great or poor. But and finally, to your point about school, we just don't know. I mean, some colleges have already said we're going to do distance learning in the fall. I know summer camps by us, many of them are closed. It's going to be very, very, very uneven and extremely volatile.
So, Paul, bring it back to what you do. What do you do with all that when it comes to investing? I mean, I don't know what letter, the sawtooth is, but how does that translate to, is there a place to hide in this market, or is there anywhere that you want to take risk right now?
There's always somewhere to go. I've never been in a market, and I've been doing this almost 32 years, where I crawl up in a little ball under my desk and suck my thumb. I've never been in that case. So there's always somewhere to go. I think into weakness. So I think markets in a trading range, Dow bound by 25,000, 22,000. Towards the top end of the range, you prune your portfolio. Towards the bottom end of the range or the middle, you add to it. But things are working. Gold stocks they've been the rock of Gibraltar. In a weakness, if we ever get it, I think you can buy them. Biotech, a little overdone. Healthcare, we all know about. Technology is working. Those things should continue to work. I'm not so much a lover of the Costco's and the Walmarts, but I think there's plenty of opportunities. And for those people who got caught with the real junk of junk in their portfolios, you have had plenty of opportunities in these rallies to pare them back. Most of these stocks that are decimated are not going back to new highs, certainly in the next couple of years, if ever. So in the rallies, you can find other things, but there's plenty of areas in the market that offer good opportunities. You just have to be a little more nimble than usual.
All right. Paul Schatz is the president of Heritage Capital. It's always good to see you. We look forward to you staying healthy and coming back.
You guys too. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.